Hello and welcome. My name's Chris Can with Mining Journal, and with me I have Marimaca Chief Executive Hayden Locke. Marimaca, of course, is getting ready to release a DFS on its namesake copper project in Chile. Hayden, welcome.
Thanks, Chris. Good to be with you again.
Hayden, I wanted to start by asking you about the copper market in general. From our perspective, there is a lot of talk and seemingly investment around a long-term copper thematic centered on the energy transition, yet investors seem to be acting on short-term price performance. I'm just wondering what you're seeing and if that resonates with you.
I am a very strong believer in the long-term copper thematic, well, medium to long-term, because I think as the price goes up, there will be a supply response at some point. That's the reason that commodities are cyclical. So yes, I'm very strongly of the view that there is a real supply crunch coming just through lack of investment and a change in the demand profile that's going forward. So yes, I do believe that. I think probably what you're referring to is a sudden run up in prices that occurred in the early part of this year, and it caught me by surprise. I think it caught a lot of people by surprise, and I think it was driven by to some degree through speculation. There was definitely some of the fast money, more speculative money coming in and dealing in exchange traded derivatives and things like that. So, I'm not surprised that it's pulled back a little bit, but I don't think it changes the long-term view. There's some nuance to it, but I don't think it changes my view of the medium to long-term.
You said it surprised you, and it surprised many people, and it is speculative, and obviously a lot of short covering in there for that last little run in pricing in May. But what were they speculating on? Is it that long-term thematic, or is it something else?
It's a good question. I think they were speculating. I think there was some positioning that potentially the US was going to start cutting rates sooner than what has become what's actually going to happen. And so I think there was some macro hedge funds and things that were looking at it and going, okay, if rates get cut, the world suddenly goes from recessionary sort of tinge to it to something that's more expansionary. Well, copper is a very strong beneficiary of that change in the economic framework. So I wonder whether there was some positioning on that. Probably got a bit ahead of itself. Some of the data that came out of the US in the early part of the year wasn't as good as what we had hoped it would be, in terms of inflation being stubbornly high, employment being stubbornly low, unemployment, being stubbornly low. The economy was still in pretty good health despite the fact that the Fed had been raising interest rates. I think that definitely tailed off. There was a lot of groups that were saying, okay, we need to close these trades down. But now the data is starting to point again to, we saw the Fed speeches recently that was indicating pretty strongly that there's going to be some reductions in the interest rates, the base rates, which will have a positive impact on global growth and through that copper.
While we're on that, just staying on the rate cuts for a moment, it looks like, as you say, the market is probably pricing in definitely one in September and probably one more before the end of the year. Is that going to have the logical effect on copper prices? Obviously, you haven't got a crystal ball. Other things could happen, but is your expectation that we're kind of sitting in that sub 995 range at the moment, that we will push more towards 10,000 towards the back of the year, or are there seasonal concerns and other factors we should be looking at?
I think it's more of a time lag factor that we have to be thinking about, which is, you cut interest rates and it's not an overnight thing that suddenly everybody has money and they want to go out and spend it. There has to be a sustained period of confidence before people start pulling the trigger on that discretionary spending, which then drives the growth in the economy. So it's not going to happen straight away, but I think it will be definitely, in my mind, give me significantly more confidence as I start talking to my board about what the future holds, certainly the next 2 to 3 years in the copper space.
Okay. When we're looking at the copper thematic and that longer term view, a lot of it is centered around the energy transition. And of course, electrification in general is important. But EVs have been a really sustained positive story. Just in the very recent news flow that we're seeing, I think we've had UBS coming out saying that they're actually pulling back on what they see as their 2030 forecasts on auto sales, with a large part of that being on the EV side, and S&P saying they're actually increasing their forecast. So I think my point on that, Hayden, is of course it depends on what they're benchmarking against. If they were more bullish or more pessimistic, then that makes a difference. But it's a retraction from that consistently positive view on EV growth and what that might mean for copper in a copper-centric energy transition, and whether you think that there is a slightly less positive view going forward.
No, I don't think it is. And I think the rhetoric potentially is certainly on the energy transition is, rather than it being a change in the rhetoric as to what is going to happen, it's a change in the rhetoric as to the timeline in which it's going to happen. And I think I may have said it to you. I've certainly said it to some other groups that I've had interviews with. The targets that were originally set were incredibly aggressive and arguably unachievable. And I think there's a realization now that we can't achieve those objectives. And so the can has to be kicked down the road a little bit. But I don't think it changes the view that the uptake is continuing, and especially in China, as an example, the EV uptake has slowed in the Western world. In China, it's dominantly the market share is growing of EV vehicle sales. So, I think I don't think it changes my view in the longer term. Actually, from my perspective, the EV is a sort of a function of the energy transition and is like a good indicator of the energy transition. But actually, the biggest driver of copper demand in my mind, certainly for the next 5 to 10 years, is the expansion and upgrading of the transmission and distribution infrastructure required to deliver all of those electrons to everyone who's consuming them in a much vaster quantity, because the energy transmission infrastructure that we have today is not capable of doing that if the energy transition is delivered in the way that the governments would have us believe it will be.
It's interesting you bring that up. I was reading something the other day about the overall grid infrastructure, the energy transmission infrastructure that's in place, and apparently it hasn't actually been upgraded in Western democracies since just after World War II. And the reason for that is obviously you can't do it without passing on an increase in energy prices to consumers, and so Western politicians have always kicked that can down the road. And that infrastructure was built without anything like the capacity, particularly for things like AI. So my question finally will be, what does that mean in terms of what you're seeing for the need to upgrade that infrastructure and build new infrastructure? And then how does AI factor into this equation?
Yeah, AI has been, so I guess it's two different aspects. I think the government-led policy spending has commenced, certainly in the two biggest markets in the world. So China, once again, is a leader. We can say what we like about their, China Inc. and what they've had to do to achieve what they have achieved, but it's a remarkable success story in terms of human development. They are once again the leader in investing in the infrastructure. They're setting another record in terms of China investing in their electrical transmission infrastructure. That's part of the reason why they're demanding so much copper, is because there's just an enormous amount of copper going into that expansion of their system. Interestingly, the data, and I think I presented this at Rick Rule's conference, the data around the next biggest investor is the US. But out of the next 8 biggest electrical consumers, almost 0 have started investing in their grid. And so, we're seeing some supply, some demand sort of coming through these two large economies doing it, but certainly in Europe, in India, in these other large economies, there's been almost no investment done, and that has to change. Even if we don't believe in the energy transition, even if we don't believe that people are going to want to have EVs, it has to change, and it's not just driven by AI. In fact, it's more driven by data centers and us using the cloud. And we've outsourced everything. The biggest single energy consumer in the world is data centers. It'll be a top 10 country. Data centers together would be a top 10 country in the world for energy consumption. It's mind blowing how much energy is being demanded. And that's just a function of us taking photos on our phones and sending emails and not wanting to have a server at home and store it all on our own computer. These data centers allow us to run everything outsourced. And, that is only going to grow. AI adds an additional burden on top of that, but I'm not sure that it is the biggest single driver in my mind for the next 5 to 10 years.
Moving on to the supply side, there has been a lack of discovery. Obviously, when we talk we point at Maramaka as one of the most significant copper discoveries of around a decade. There hasn't been anything else really. I think Rio Tinto's Winu is one that's obviously on the radar. Very other developable, if that's a word, copper projects that have been discovered that are of world-class scale. We had a period of relative quiet on the industrial activity front in Latin America for a period. That's changed. Escondida recently kind of kicked off again. BHP's battling with that. Lundin's got a few issues that may be coming in on that front too. Where do you see the supply constraints? How do you see supply attempting to meet this wave of demand, which is inevitable even if the timing is questionable?
Yeah, I think industrial action and disruptions caused by industrial action is a fact of life in a large industrial industry like mining. And I don't think that is going to be the biggest driver of a shortfall in supply. By far, the biggest risks, as I see them, to supply are geopolitical. For example, what's happened in Panama, where almost overnight, you take out a significant proportion of supply from a single operation. And then by far the biggest for me is just the way that assets have been managed and management teams have been incentivized. They're not incentivized to think for the long term. And so as a result, all of the mines that have been running for years and years, you logically are going to try and do what's easiest for you, and you're going to take the best part of the deposit, and you're going to potentially cause yourself longer term issues. And I think some of those are coming home to bite. There's a piece of research out of a group out of New York, I can't remember the name of them, talking about the investment required just to maintain, not to increase, just to maintain the production for the top 20 copper mines globally. And it's something in the order of $50 billion over the next 10 years, just to maintain. You see this from Escondida. They'll have a good year this year, but declining grades, slightly deeper deposits, going back and looking at, how they might reprocess tailings and things like that. I think by far the biggest challenge is how do you maintain the production in deposits that are getting deeper, getting older, infrastructure is getting old. You've got to invest more money just to maintain it, and the grades are declining. There will be some of that is offset through technological advancements, but that's going to take time. And so I can't see how we can possibly achieve that in the next 5 to 10 years.
When we look at the energy transition and the demand from that in an isolated capacity, and probably then AI taking that also in isolation, obviously there's a traditional demand for copper which comes from the largest economies in the world and then emerging economies as they industrialize and urbanize. When we look at China and the US, it's a really mixed picture for a number of reasons. What I get confused about personally is a lot of things, but on the copper front, what I get confused about personally is how important are those major economic drivers that we're used to versus the energy transition, which will change the picture of metal demand going forward. If China and the US don't behave themselves and can't right listing ships essentially from an economic perspective, does that mean that the breakout copper story vanishes?
Yeah, it's very, very important. So Dr. Copper is still very much the key driver of the demand for copper. In terms of percentages, I think, as of right now, it's still the majority is driven by the traditional demand centres. So it's finished electrical goods, finishing of housing and apartments and the various consumables that go into that, anything that requires you to conduct electricity. So if there was a significant downturn in one or both of those economies, yes, the short-term story would very much be in trouble, which is one of the reasons why I had always thought that why I was so surprised about the sudden run-up in prices at the start of this year, because I was looking at the world and going, okay, we've got stubbornly high inflation, we've got low unemployment, everything's kind of booming along, but inflation is going up. And so almost in a globally synchronized manner, the Feds were tightening and they were raising interest rates and increasing the cost of capital. And it was having not a huge impact on on inflation. It wasn't bringing inflation down and remaining stubbornly high. But we were starting to see the labour market soften a little bit. And so I was surprised that copper had that run that it did. But as I look at it, I don't think we're at a risk of there being a significant, I think they've started to flag that they're looking at, reducing some of the interest rate, cutting it a little bit, loosening up on the monetary policy to try and offset some of what we're seeing, which is a tightening of the market. So, as I see it, it is a risk, but I don't see it as a big risk at this point in time. And then onto the second portion, I don't see the energy transition is not going to be an ongoing and forever change in the demand profile of copper. I see it as an infrastructure investment, and I've made the presentation that this is an infrastructure-led cycle that could last anywhere between 5 and 20 years, depending on how quickly governments take up the mantle to try and advance their infrastructure to cope with this future of increased energy demand. Them kicking the can down the road in terms of their timelines is only going to benefit the copper industry, because it's going to take longer and longer for that demand to come through and to play out. There will be a logical point where the infrastructure investment's done and you don't need to do any more for another 25, maybe 50 years. And then it goes back to the old Dr. Copper.
Hayden, that's all we've got time for. Thanks for joining us.
Thanks.